Hello everyone, welcome to Easy Economics. How are you all doing? Well, today I brought for you all an exciting series for paper 1. We'll be doing October-November 2023, variant 12. On my right, you can see an MCQ sheet. This is somewhat similar to what you will be all getting on your exam day. So I've brought in for you all this sheet so that you may all see how you are all going to shade in your responses on the exam day. Total 30 MCQs will be given to you, and you'll be having 45 minutes to record in your answers. So this means max 1.5 minutes to be spent in solving each MCQ. However, in MCQs which are relatively easier, you can maybe do that in less than a minute or so. All right, so let's look at what this paper has. Number 1 says, which statement is correct? Economic goods, they're talking about economic goods and free goods. Before I read this MCQ, just let me tell you tell me what were economic goods or what were free goods. Yes, exactly. Economic goods were goods for which you require resources to produce them, and they have an opportunity cost. They have an opportunity cost. On the contrary, free goods are exactly opposite to economic goods. Why? Because neither do they require any resources to be produced, and they do not even have an opportunity cost. For example, exactly, you're correct, wind, water, and air, right? So now match the definition with the responses. You see, in every MCQ, will be 4 options. Out of these 4 options, there are always going to be 2 options which you can easily eliminate because they will be making no sense. So you can easily chop them off. Then you will be left with the remaining 2. And out of those 2, you will need to make a choice. You need to make a wise decision, which is the correct one. All right. Now, let's look at the first one. It says which statement is correct. So you are going to identify the correct statement. Economic goods are not scarce. No, we've recalled it by definition that no economic goods were scarce. So this is chopped off. The second one says economic goods have no opportunity cost. Again, this is incorrect because by definition, we know that economic goods carry an opportunity cost. So see, 2 options already eliminated. So you're left with the last 2. Option C says free goods are scarce. Free goods have no opportunity cost. No, the third one is wrong. Why? Because free goods were what? Yes, free goods were not scarce. So you're left with D. So D is the correct answer. I'm going to shade it. The second one, the economy of country X is always on the PPC. When will the goods and services produced by country X become more scarce? So now an economy which is always on the PPC, and what is happening to it? The resources are getting scarce. So I say capital goods in the vertical axis and consumer goods on the horizontal axis. Now the resources are getting scarce. So what happens when the resources get scarce? Exactly, the PPC would shift inwards. And what would be a situation in the population then? So it has to be either, you see, it has to be unchanged, cannot be the situation. So 2 options eliminated in this way. So you're left with A or B. Now out of A and B, look at the options and then see. Population size is unchanged and population size increases. Yes, population size has to increase to put a strain, right? So it's A. This is how you go about choosing responses. What is capital? Capital was a factor of production. Now come on, before reading on the responses, recall the definition of for capital for me. Yes, capital is a factor of production. It is attributed to anything that is used as an input to further production. Human-made resources that aids in the production process, right? Offices, factories, machinery, railways, tools. Remember, we read them all, and they were all examples of capital. Now, looking at the definition, recalling the definition and looking at the responses, which one do you think is the correct option? The ability to organize the factors of production? No, that's entrepreneurship. You can easily chop it off, eliminate it. The energy used in production? No. The factory used in production? Exactly. The money invested in a firm? No, because the purchase of capital goods is known as investment. So the correct option is C. See, I'm explaining you the logic. We're not just answering, we are answering it the logical way. You can go quickly if you know the answers, but then I'm explaining it to you also. I'm going it the logical way. All right. Fourth one. What are the features of a market economy? Now, what was a market economy? Market economy is an economy in which the action of the individual consumers, the firms, and the households in the private sector actually determine the allocation of resources, right? And is there a role for the government or the public sector or no? No, there's no role for the government in the public sector. All right. Now, there's a private ownership of factors of production. Yes. Public ownership of factors of production. No. Government allocation of production. No. Now, see which response satisfies these three criteria. We want the public ownership of factors of production. Yes. A and B are chopped off. C, we left with C and D. Right now, public ownership of factors of production. No. And government allocation of production? No. So C is the correct answer. All right. D. The fifth one. Public transport and cars are substitute goods. The price of public transport rises. What will happen to the demand for cars? Now here, public transport and cars are substitute goods. Now recall what is the situation in substitute goods. When the price of any, when there are two substitute goods and there's an increase in the price of one, automatically the demand for another increases. Pepsi and Coke. If the price of Coke increases, the demand for Pepsi will increase, right? So now what is happening in this situation? The price of public transport is increasing. So if the price of public transport is increasing, what should happen to the demand for cars? The demand for cars should increase, right? Now option A and B says it will contract and extend. You see, contraction and extension in demand is the scenario when we are talking about the price of the good itself. But when we are talking about factors other than the price of the good itself, we talk about either an increase or a decrease. Now, in this situation, the price of the public transport was increasing, so the demand for the cars has to increase. So D is the correct answer. I hope you all are with me. Let's look at the sixth one. The markets of 4 products are all in equilibrium. Now, A, B, C, and D are depicting the markets for 4 products. And what is the situation now? They are all in equilibrium. The table gives the value of the price elasticity of supply for each product. Now, for each A, B, C, and D, these are the 4 products. And these are the price elasticity of supply for each of these 4 products. For each of these 4 products, the demand is shifting to the right by 5,000 units. Which product will have the largest price increase? How are you going to determine it? You're going to determine it by looking at the price elasticity of supply. What was price elasticity of supply? That measures the responsiveness in changes in supply to the changes in price. Now, if a demand for a good is increasing, the price in the market will rise. This is what the rule of thumb says. If a demand for a good increases, the price in the market rise. So the price rise will be maximum when the supply cannot be increased quickly. When the price rise has to be maximum when the supply cannot be increased quickly. And in which situation of the price elasticity of supply depicts such a scenario in which the supply cannot be increased quickly? 2.5 is a situation when the price elasticity of supply is extremely elastic. This cannot be the situation. 1.0 again, elastic? No, it has to be 0. Why? Because over here, the demand is perfectly inelastic. Price elasticity of supply is 0. It has to be A. Why? Because the demand is increasing by 5,000 units and the supply is not at all going to increase. So all the effect has to be shown by there has to have a largest price increase. So this is, for this product, it has to have the largest price increase. All right? This is A. So 7th one. What is the value of the price elasticity of demand for a product if total revenue remains the same when the price is reduced? Now, total revenue has to remain the same. They say, although the price is falling, but the total revenue is the same. Now, if the total revenue is the same, even though the price of the product is reducing, it means that the proportionate change in price is actually matching the proportionate change in demand, right? The proportionate change in price is being matched by the proportionate change in demand. That is why there is no increase or decrease in the total revenue. The revenue remains the same, even though the price is reducing. So there's no change in the revenue. So this means that the price elasticity of demand has to be 1. It has to be unitary. If it was 0, if the price elasticity of demand was 0, revenue should have been falling. If it would have been between 0 and 1, this means it would have been inelastic, so revenue would have been falling. If it would have been greater than 1, it would have been elastic, so revenue would have been increasing. The demand would have been elastic and the revenue have been increasing. But in this case, they say it remains the same. That it means that the proportionate change in the price is matched by the proportionate change in demand. Hence, it has to be unitary price elasticity of demand, in which means it has to be 1. When is price elasticity of demand unitary in this situation? See, it's exactly the same proportion. The proportionate change in the price is matched by the proportionate change in demand. So in this case, PED has to be 1. Right? All right. So the answer is D. Number 8. Number 8 says the owner of a hotel in Malaysia finds that the price elasticity of demand for accommodation is in the area is minus 1.7. If the hotel owner decreases the price of a room by 5%, how would the demand for a room change? Now recall the formula for PED, please. Percentage change in quantity demanded upon percentage change in price, right? So in place of PED, you can put a negative 1.7. In case of this you can put an X. And in the denominator, you can put a negative 5. So you cross multiply a negative 1.7 into a negative 5. The negative sign will cancel out and it should give you an 8.5. Its a percentage was already there. That is why it has to be. So it would increase by 8.5%. Easy? Right. 9. Good weather results in an increase in the demand for tomatoes. It also increases the supply for tomatoes. What must be a result of this? So now the demand is also increasing and the supply is also increasing. So the price of tomatoes will fall? No. The price of tomatoes will rise? No. So demand is also increasing. At the same time, the supply is also increasing. So what will happen? Sort of an equilibrium situation, you can say. So the quantity of tomatoes traded will fall. No, the quantity of tomatoes traded will rise. So it has to be D. 10. What causes a change in the price of a product in a free market economy? What causes a change in the price of a product in a free market economy? And what happens in a free market economy? Consumer sovereignty, remember? So it has to be changes in the quantity of public goods, no, changes in government acquisitions. Again, these two are eliminated by that. Changes in external costs and external benefit. External costs and external benefits cannot be. Why? Because externalities was a drawback of the free market economy. Remember, externalities, negative externalities, changes in demand and supply conditions, consumer sovereignty, price mechanism. Price mechanism is how resources are allocated in free market economy. We look at what the consumer is demanding. Number 11. The ways of making and receiving payments continue to develop. Payments can now be made by using smartphones as well as cash, debit cards, and credit cards. Which method of paying for products provides no information to sellers about their customers? Debit cards, credit cards, smartphones, all can provide you a lot of data, except for cash. So it has to be 11. Has to be for 11, it has to be 8. Easy? All of these give you information apart from cash. So it has to be 8. They say which method products provides no information. Number 12. In most countries, which organization controls the banking system? Come on, it's so easy. Central bank. I do not even want to look at the responses. Oh. All right. Number 13. What is not a reason for differences in the earnings of airline pilots in a particular country? What is not a reason for differences in earnings? Now, differences in earnings can be because of discrimination, government policies, inflation, bargaining power of employees. Now, bargaining power of employees, yes, it can be a reason because in some situations, because of the trade unions, they tend to put a lot of pressure on their employers. Discrimination, yes, gender discrimination could be there. Government policies, yes, government policies could be there. Government can favor a particular industry. Inflation, yes, inflation cannot be. Why? Because inflation is equal across the board. It has to be there for everybody. So it can never be a reason for the differences in the earnings, right? These three are the reasons for the differences in the earnings apart from inflation. So it has to be C, D. 13 has to be D. Those three options are the reasons, the first three, but apart from D. 14.1 says, an airline takes over an online clothing company. Now see, it's an airline. And what is it doing? It is taking over an online clothing company. What is an advantage of such a move by the airline? So by default, the statement is telling you there's something related to diversification. And the keyword present in the first option there is diversify. Still, we are looking at the options to ensure that we aren't going for an incorrect response. To diversify their operations, to generate economies of scale, to improve lines of communication, to increase market share. Incorrect. Can never be generate economies of scale. Cannot be the situation in this case, because economies of scale would have come if it would have been increasing the number of airlines. Then the average cost of average cost would have been going down, right? But it's taking over an online clothing company. It's going into an entirely different domain, entirely different arena of business, right? It's diversifying its operations. 14 has to be A. Get the logic? Right. 15. In which type of industry is a firm most likely to make a large profit in the short run and in the long run? So it has to have a profitable situation both in the long and the short run. Number of firms in the industry, barriers to industry. So number of firms in the industry, there are a lot of firms in the industry. So in the short run, it won't be able to. So A and B, if you look at the first table, so it cannot be. So A and B, you can chop it off at that moment only. Now the second part of the table, so if by the looking at the first part of the table, you've already chopped off the first two options. Now number of firms in the industry has to be 1, and the barriers to entry into the industry have to be high, right? In order for you to enjoy a sort of a monopoly situation, remember? So it has to be C. 15 is C. So far, so good. We're halfway through the paper. Good news. 16. A firm produces 5 units of output at an average cost of 20 per unit. The cost of the 6th unit is $26. What is the average cost of 6 units? It's a simple calculation. I'll show you how it works. It says a firm produces 5 units at an average cost of 20 per unit, right? Now, so it was 5 units and the average cost is $20 per unit. So take out the total cost. The total cost would be 5 into 20. So it has to be $100, right? So this is your total cost. Now they're saying they've added on to another unit, right? So total there are 6 units. Now the cost of the 6th unit is 26. So what will be the total cost now? The total cost will be 100 plus $26. It has to be 126. So this is your new total cost. I'm writing NTC, right? So now they want you to find out the average cost of the 6 units. Now it has to be 126 over 6. It has to be 21. Correct? So far with me? All right, good. 16 has to be D. See? Number 17. What is an example of a government macroeconomic policy? Increasing the money supply, preventing price rises in the food industry, removing a monopoly's barriers to entry, setting a maximum price for wheat. Now, we are talking about an example of a government macroeconomic policy. You see, B, C, and D are all talking about certain sectors, certain industries apart from A. Over here, we are talking about the food industry. Over here, we are talking about receiving a particular monopoly, removing a monopoly's barriers to entry. In part D, we are talking about maximum price for wheat. So all of these three are chopped off, increasing money supply. 17 has to be A. 18. Why would devaluing the international value of an economy's currency help reduce unemployment? So why do you think if you are devaluing your currency, so unemployment is going to reduce? Let's look at the options. Devaluing the currency would increase the cost of production. So if the cost of production increases, you think it would bring around a positive change in increasing the employment level? Obviously not. When the cost of production increases, what happens? The firms lay off workers. So it's negating the situation. Eliminate it. Get it? B. Devaluing the currency would increase the confidence of investors. If your currency is devaluing, so you think foreign investors are going to invest in your country? No, it's the opposite. Again eliminated. You see, two options eliminated. C. C says devaluing the currency would increase the foreign demand for domestic products. D says devaluing the currency would increase the demand for imports. If you're devaluing your currency, so imports are going to be expensive and exports are going to be relatively cheaper. So if you're devaluing your currency, so would it be increasing the demand for imports? No. Look at option C. Devaluing the currency would increase the foreign demand for domestic products. Why? Because your exports are going to get relatively cheaper. That is the reason. So it has to be C. Explaining you the logic, the reasoning behind the options. C. Why I've selected C, I'm explaining you the reason behind it. 19. What is likely to happen when the rate of interest increases? What happens when interest rate increases? We save more, right? And would it be easier to borrow money from the bank? No, it will be relatively difficult for firms to borrow, right? So consumer spending will increase. Firms buy fewer machines. People hold more cash. Savers earn lower rewards. Which is the correct option? It has to be B. Firms buy fewer machines. Firms will find it relatively difficult. Having borrowed money from banks would be expensive. It has to be B. D. What is not a supply side measure? Now, what were supply side policies? Supply side policies are measures to increase aggregate supply, right? And what used to fall under supply side? Can you recall it? Yes. Lowering direct taxes, increasing incentives, deregulation, privatization, subsidies, labor market reforms, all were supply side policy measures, right? So what is not a supply side measure? Skills training for workers is a supply side measure. Privatization is a supply side measure. You are controlling the trade union power. Labor market reform, it will fall under. That is also a supply side measure. So higher indirect taxation, that is not a supply side policy, right? So this is the correct answer. All right. Number 21. 21 says the table shows the real GDP per head for a country in 2021 and 2022. In 2021, the real GDP per head was $20,000. In 2022, it rose to $21,000. What is most likely to have changed between 2021 and 2020? Now they're saying what could have been the reason behind this change. Incomes were distributed more evenly. There was more activity in the informal economy. The living standards of some people improved. The rate of inflation increased. Incomes were distributed more evenly. You cannot, no, it cannot be the situation. There was more activity in the informal economy. This table cannot provide you that information. The rate of inflation increased. Had the rate of inflation increased, the real GDP per head would not have increased, right? So it has to be the living standard of some people improve. The real GDP associated with the living standard, since there is an improvement, it has to rise. 21 is C. 22. Which change to fiscal policy is most likely to reduce cyclical unemployment in an economy? Now, cyclical unemployment was what? Demand deficient unemployment, right? They're saying which change to fiscal policy is most likely. Now, out of these options, which is going to reduce the cyclical unemployment, right? To reduce cyclical employment, what does the government used to do? It needs to increase the production. The government needs to spend in more, right? Because why? We want to increase the economic activity, right? So how can economic activity be increased if the government spends more? So the government spends more, what happens? It spends more than its revenues. There has to have a budget deficit. If the government is increasing direct taxation, so it's going to have a reverse effect. This is eliminated. Increasing the money supply, no. Increasing the budget surplus. If it's a budget surplus, what does this mean? That the revenues has to be greater than the spending. So in this case, this is going to be entirely the opposite of what we want in order to reduce cyclical unemployment. So it has to have the budget deficit. Why budget deficit? Because we want government to spend more. And when the government is going to spend more, why? Because it wants to boost its economic activity. So there will come a situation where it will be a budget deficit situation. The spending has to outstrip the revenues the government would be receiving. So 22 has to be B. 23. What must have happened in a country when it experienced an annual rate of inflation of 100%? Now imagine there is a rate of inflation of 100%. What is happening? The money supply doubled? No. The price level halved. The purchasing power of money halved. The real value of money doubled. Now, how can the real value of money double when the rate of inflation is 100%? So two options already chopped off. B and C. The price level halved. The purchasing power of money halved. The price level halved. The annual rate of inflation is 100%. How can the price level halve? The purchasing power of money halved. The value of money is falling. It has to be C. 24. HDI, Human Development Index, is used to measure human development in countries. Which measure would not be a part of its calculation? Now, what factors do HDI takes into consideration? It takes into consideration life expectancy. It takes into consideration GNP per head. It takes into consideration years of schooling. So GNP per head, years of schooling, life expectancy. All three it intakes, which it does not inequality of incomes. So it has to be A. So if you remember what was HDI and what does it include, easily you can do it. So you see how easy it gets when you remember the definition or when you remember the entire concept. 25. What is most likely consequence of an aging population for a high income economy? What is the consequence if your population is aging? Yes, the dependency ratio increases and there's a burden on healthcare, right? Now just saying what is the most likely the consequence? There will be a fall in the dependency ratios. No, there has to be an increase in the dependency ratios because the population is aging. So it's negating, you chop it off. There will be a fall in the level of immigration. Immigration has nothing to do with the aging population. There will be an increase in the geographic mobility. No, again, it's negating. There will be an increase in the spending on healthcare. Yes, because you need to take care of your elderly. 25th, it has to be D. All right, people. I hope you all are with me. 26. In some developing countries, a large percentage of the population is involved in subsistence farming. What can be concluded from this? You remember what was subsistence farming? When farmers grow their crops for their own living, right? So they are sort of producing for themselves only. What can be concluded from this? Each family will be able to produce enough to live on. Production is unlikely to be capital intensive. Production will be efficient. There will be a high level of trade. There cannot be a high level of trade because they're growing it for themselves only. They're not using it for economical purposes. Production will be efficient. Production cannot be efficient because if there's a bad weather or there's a bad harvest of crop, what will we be able to do? Production is unlikely to be capital intensive. Yes. Why? Because they will be doing it all by themselves. So it has to be more likely to be labor intensive, right? So it is unlikely to be capital intensive. Each family will be able to produce enough to live on. Subsistence families, they're barely surviving. They're doing it for their own living, right? So production is unlikely to be capital intensive. It has to be B. Understood? 27. A small country whose only export is oil decides to reduce substantially the rate at which it extracts its limited oil reserves. What is the most likely reason for this decision? Now, why do you think a country is small and it has decided to reduce the rate at which it was extracting oil? To improve the balance of payment in the following year, to increase current government income, to maintain future living standards, to raise the level of employment in the oil industry. It's reducing the rate at which it was. So it can never be, how can it raise the level of employment? No. To improve the balance of payment in the following year, it's reducing the amount extracted. So how can the balance of payment improve? To increase the current government income, no. To maintain future living standards. Why? Because it does not want to deplete its natural resource. It wants to conserve. It's looking at conserving its natural resource. 27 has to be C. It's trying to maintain its future living standards. 28. Country X believes that country Y is selling steel at prices below the average cost of production. So country X imposes a higher tariff on steel imports from Y. What does country X hopes to achieve by imposing this higher tariff? Now, country X believes that Y is selling steel to X at prices below its average cost of production. So in order to prevent such a situation, what it does is it imposes a higher tariff on imports of steel from country Y. Now they're asking you, what does it intend to achieve? So what is the intention behind doing this? Avoid country X dumping steel into country Y avoid country Y dumping steel in country X, reduce inflation in country X, reduce inflation in country Y. Now it's something to do with country X benefits only, right? Because it's doing something, so it's doing it for its own benefit. So it cannot be something, this step cannot do anything to country Y. So you can chop off A and D at that moment only. Now, I haven't read B and C, but I have chopped off Y because it is doing something to protect its own country, right? So it has to relate to country X, right? Avoid country Y dumping steel in country X, reduce inflation in country X. Now it is imposing tariffs. Why? Because it wants to avoid country Y from dumping steel in its country. So 28, it has to be B. 29. Which factor would cause a country's exchange rate to fall? Demand for imports increases, domestic interest rates rises, domestic savings increase, more tourists visit the country. Yes, domestic interest rates rise. If the demand for imports is increasing, it cannot be. It has to be domestic interest rates rise. So if the domestic interest rates are going to rise, the country's exchange rate is going to fall. 29 has to be B. 30 says many European firms employ workers from the Philippines. These workers send part of their income to relatives in the Philippines. In which part of the BOP current account for the Philippines would these transactions be recorded? Primary income, secondary income, trade in goods and services. Trade in goods and trade in services. Now, trade in goods record the value of exported goods and the value of imported goods. Trade in services talks about the value of exported services and the value of imported services. Over here, this is talking about foreign remittances. So C and D cannot be the options. You can chop it off. Primary income involves income earned by people working in different countries and investment income that comes into and goes out of the country, right? It talks about compensation of employees, it talks about wages and salaries and other benefits, and it talks about investment income. It talks about profits, it talks about dividends, it talks about interest receipts. So it cannot be, it has to be secondary income. Why? Because secondary income talks about transfers of money, it talks about goods and services sent out of the country or coming into the country, not in return for something else. Right? It includes gifts and includes donations and it includes remittances. So it has to be secondary income. There are 4 parts in a BOP current account structure, right? There are 4 components: trade in goods, trade in services, primary income, and secondary income. It cannot be trade in goods and trade in services because it's talking about foreign remittances, and it cannot be primary income because primary income is again, it would be talking about income earned by people. It would include compensation for employees or it would include investment income, but here it's talking about foreign remittances, so it has to fall into secondary income, so it has to be B. So for 30, it's B. All right, so this brings up to the end of this paper. I hope you all have understood. Stay tuned, and I'll be meeting you all in another exciting paper. Take care. See you.